Hey everybody, Chad Shimabukuro here with Keller Williams Honolulu. I want to make a quick video about Silicon Valley Bank. And the reason why I thought I'd make this video is because I get so many phone calls, texts, and emails about this issue. And this issue just came about for the first time last week. So as you guys may have heard in the news, Silicon Valley Bank was closed by federal regulators. And a lot of the questions that I'm getting is, are we on the verge of what happened in 2009 with the mortgage meltdown? Because it seems similar. And I think by way of a bank closing and people making a run on the bank is when customers of that bank all go in and demand to withdraw all the funds that they have. That's a run on a bank. And that happened as well in 2009. So let's talk about it. Let's talk about some of the similarities. So if you look in the news, you can see like tons and tons of, clippings. Some of it is making it rather political or what have you. It really isn't. One has nothing to do with the other. But is your local bank, so we're in Hawaii here, is your local bank at risk? Who knows? There's a lot of things that are beyond the horizon. Depending on the economy, war can change certain things. Crisis like a pandemic that we just came out of, that can impact a lot of things in terms of interest rates, policies, banking, and so forth. This particular thing, just isolating this issue and this incident in and of itself is first and foremost, the FDIC insures deposits up to $250,000. So I would say in most cases, 80 to 85% of normal banks, so a community bank, a local bank, their clientele, their customers, you and I and small business and so forth, have less than $250,000 in any given account. So you're fine. It's insured by the federal government, again, up to $250,000. So that's kind of the norm. Silicon Valley Bank, this particular financial institution, their demographic and the clientele to which they served wasn't typical. It was atypical. And who they served was hedge funds, tech startups, different kind of businesses like this, and more aggressive businesses. And as such, these businesses, because they raised venture capital and had a ton of liquidity, at least to start up their businesses, had it all deposited into this institution, this bank. So it was almost the inverse of what the norm was. The norm being 80 to 85% of all the clientele has less than $250,000 in the bank, meaning that it's insured by the government. They were almost the inverse, whereby up to 90% of the clientele and deposits were far exceeded that amount, far exceeded $250,000. Some of them had multi-million dollars in there. And what does that mean in a normal circumstance? That would mean that anything above the 250,000 may not be returned or refunded or what have you to that depositor or that client, that customer. And that would be an absolute crisis if in fact it was a local bank and it was bank to bank to bank, and it kind of created a domino effect. I've been in this industry for quite some time, and during 2009, I remember this specifically, is when people made a run on the bank, they would do that to a number of different banks in the area. And I remember seeing long lines of customers at the bank demanding that the bank give them all the money that they had in the bank. What many people don't know is a bank is not like, I think, we kind of funny, we think of it like a cartoon or the Wild West, where there's a caged room in the back that's within a safe, and there's stacks of coins and stacks of cash. That's your money that you're from your paycheck that you deposited. But that's not what modern banks have at all. In fact, most banks have on hand maybe between 1% and 3% of the actual deposits that you make. Everything is credits. Everything's is credit deposits and digital deposits, and in fact the bank reinvest that money elsewhere. So most banks will reinvest it into their clients in the form of loans. So auto loans, personal loans, mortgages, and so forth. They're reinvesting in that. And many banks purchase bonds. And the reason they do that is that's how the bank makes money, is they can lend things out to you at a certain interest rate. They're holding your funds, but they don't hold it in the back room. They hold it and reinvest it. And so when any kind of thing like this happens and people make a run on the bank, you can only withdraw so much money before the bank closes down and has no more liquid cash available at all, which is certainly the case here. But just know that this issue, this circumstance, does not impact whatsoever your local bank that you're dealing with, which is a good thing. And I think that the Fed stepping in, and I think the current administration's idea, I believe, at least the announcement that I read just the other day, was that they're going to make good all the deposits that even exceeded the FDIC amount. If that's in fact true, that's a good thing, because consumer confidence is extremely important for the U.S. economy. That's probably one of the most underrated stats in our economy. So when we look at different things, people talk about unemployment rates, they talk about other, GDP and different kind of things. And I think consumer confidence is one of the most important things, because consumer confidence can get you through almost any hurdle. If the people believe in the dollar, the US dollar, and they believe in the US economy and how strong it is, that'll push you through anything else. So if in fact the administration does make good on, even though this issue does not affect local banks, if the administration backs everything that they should, that's above 250,000, I think that's a good thing to keep and maintain high consumer confidence in the Fed, in the administration, in the U.S. dollar, in the banking system, and so forth. Because people get a little crazed, and when they have that crazed idea of let's make a run on the bank, it literally snowballs. So that's a good thing. But again, for those who are calling and asking my opinion on this matter, it's not a big deal. It is something to keep an eye on for additional banks and how they invest their money, because you don't want a domino effect by any stretch. But at the same time, this doesn't impact your local bank at all. So hopefully that helps. And as always, I'm here for anyone, whether you're with our brokerage or not. If you want to give me a call for any reason, you can do so, 808-754-5800. You can also email me at chadshima@kw.com. Have a wonderful day.